Hey guys, welcome back. In this video, we're going to talk more about higher time frame levels, okay? Um, Highest high, low, and midpoint. And yeah, and one of the learning goal from this section is that if you only learn these levels for the rest of your career, this would be it, okay? So let's um, let me show you what I mean, okay? So I'm gonna be showing you exactly how to use these levels to identify trend, find entries, set targets, and manage risk. Everything you need is in these three levels, okay? And specifically, like those three levels are divided into these five levels, so like one, two, three, four, five, okay? And as you can see in the last lecture, I took a trade here based on 50% level and see it's profitable right now. See, so as you can testify for yourself, I executed this trade live. Okay, so we're gonna explore more in depth how we can take this sort of entries. Okay, so let's go ahead and let's talk about the um, HTF5, which is this point, the ceiling, the highest high on higher time frame. Okay, think of it as ceiling. Okay, so as I told you in a downtrend, this acts as resistance, meaning price has a hard time breaking above it because there's a lot of selling pressure at this level. Okay, so as you can see, as you can see, as the price comes here, when this in a downtrend, when the market is in downtrend, this acts as resistance. Okay, and as you can see, and if the market is in uptrend, this acts as target. So we are trying to reach it, and break it through. When it breaks through, the structure updates. As you can see, as it's in uptrend, if you had entered long there, your target was there, okay, and it made new high, and it's trying to break through. So that's what we did here on the 50% level, and I set the target. That's why there, okay. So let me show you the example of downtrend then, shall we? So you can see here as we were coming down, 75% level. If I enter short there, this is my profit target, right? So that's why that's the use of this, okay? And see downtrend, this acts as resistance. So if I short there, I can take my profit target there. Okay. So breaking above the STF high is a bullish breakout, and that's when the new trends begin. So see, it breaks above this STF high, making higher highs, and when it pulls back, that's here you can enter long and new trend begins there. So let's talk about STF low, and we can call this as floor. Think of it as floor as well. So what it does is, um, in an uptrend, this acts as support. Okay, so when it is in uptrend, you see here, okay, this is in uptrend, you see it's making like higher. This one was higher than the previous one. So when it comes around here on the lowest low, it acts as support. Okay, and price bounces out of it because there's a lot of buying pressure at this level, and you can see a lot of buying pressure here. You see this sort of candle, right? And like a lot of volume coming here. Okay, and you see this bounces out of like this. Okay, and when in downtrend, this acts as target. Okay, so coming here, Okay, when it is in like downtrend, you see here in the market, the show you what I mean, like see here. As it is coming down, you see -5%, -6%, the range, and 75% retracement here. If you had entered short there, your profit target would be this. Okay, and you can measure this like this here. So if you had entered short there, stop loss there, take profit here. This was easily 1:5 trade. Okay, and what we are trying to do in a downtrend is this access target. So we are trying to reach it or break it below. And when it breaks below, structure updates. And as you can see, it was -5% and -6% because made new low. Okay, so yeah, now let's move on. That's what we talked about. So when breaking below this HTF low is a bearish breakdown, and that's when downtrend accelerate. Okay, so let's talk about HTF midpoint, the most critical level. Okay, this is the 50% level between the high and the low. This is where the market gravitates towards. Okay, and there's a concept called midpoint magnetism. Price wants to return to the equilibrium. Right? I think we talked about this. I'm just like um, showing you more example, you know, and yeah. So why? Because price wants to return to equilibrium, and the midpoint is where buyers and sellers are most balanced. It's the fair value zone. Okay, so as you can see here, that's where we enter trade. And as it was uptrending, means buyers were in control, and as soon as it came here, you know, uh, we enter long trade there. You can see here as well. Okay, so yeah, and I can actually show it to you by applying the volume as well. So I can apply wave volume, okay, and show you what I mean. So here, as you can see, on this down wave there was 100. Okay, let me uh, the U scale unit 10. Okay, so 184 unit of volume on this down wave, meaning good selling. But and then on this up wave, volume 10 units of volume, and then another down wave which is 90 unit of volume. So say this wave volume was less than this one. Okay, and then again on this up wave we see 148 unit of volume, so which is greater than previous up wave, and on this down wave we have like 101. So the volume is more, but the market didn't came down much. Okay, so this was, we call it like more effort less result. Okay, on the downside. So that's why the bullish nature of the market happened. And we can apply it here as well. This is the wave volume divergence. See, 168 units of volume, and on the downside, then 138 1 unit of volume. Okay, so with less volume, it made new low. Okay, this is the volume divergence. Okay, and where it's happening on the midpoint, meaning the buyers are taking control. Okay, all right. So um, now we can move on. So we can say that midpoint acts like gravity and pulling price back. All right. So you see, as the market went there, it act then like this midpoint acted as gravity, and the price just midpoint attracted the price to that fair value zone, which is the midpoint here, 50% level. And from there, it bounces off. So the key principle is the first pullback in an uptrend typically reaches 50% of the prior swing high. Where you see, first pullback of this trend reaches 50%, right? And so when price makes a big move up, then pulls back, where does it stop? right at the 50% level, right? And that's the 50% rule in action. All right. You see, it made new high and then it stopped here in the 50% level. So if the price fails to reach 50%, and that's a very strong trend, okay, and it means buyers are so aggressive, they're not even letting it pull back halfway. Okay, what it's telling us is this. You see, when the market didn't even pull back to 50% level, it's just like staying above that means buying pressure is very aggressive. Okay, you can also see it here. I'll show you a couple of examples. Uptrend. I'm looking for uptrend here. Yeah, I mean, yeah, you can see that this one. You see, it stopped there and then went back up. But after that, it's just like, broke below this level and then went gravitates to the 50% level. Let me just turn off the wave volume so that we can see it clearly. You know, yeah, this example is good. You see, it tries to go down but didn't, and the buying pressure was so high that it gravitates up towards, right? So yeah, and you can see here market was uptrending and on the pullback 25% level, boom, right? 25%, 50% level. Okay. So what it's trying to tell us is that um, it means that buyers are so aggressive that they're not even letting it pull back halfway. Okay. If it breaks through 50% level, if the price breaks through 50% and it's likely to reach 100%, meaning it will retrace the entire move. So what it means is it's below 50%, okay, like this. Okay. Um, Hang on. I think let me find better example. Well, yeah, you can take this one. It tries to break above, didn't, but when it breaks below, it tries to reach the 100% level here. You see, like it was only off by 0.3%. Like see here, you can see when it tries to go up but didn't, when it breaks below 50%, then it goes to the lowest low point. Okay, here again. That's a very powerful trend signal, so right now the 75% rubber band effect that we talked about is the upper HTF midpoint at 75% level. So when price reaches the 75% level, it's stretched like a rubber band and it wants to snap back. Okay. Um, so yeah, I mean, I have shown this example here as it's downtrending. You see, let me show you another example. Okay. So you see this percentage change. I think my working area is. So you see this percentage change, 4% minus 5%, meaning, it was making this new low. So this was downtrending already, right? Now, as the market comes to this 75% level, so this is your low, this is your 25%, this is midpoint, and this is 75%, and this is your 100%. Okay. So the trade setup here, it says if it's downtrending, right? If it's downtrending, you can short at the 50% level or you can short at the 75% level. Okay. So yeah, let me move here. So see, as the market come here, right? You can see this big rejection here. Okay. And market making lower high, lower low, right? Lower high, lower low. So we can short here. Okay. Because it's already downtrending. So that's your 75% rubber band effect. Okay. Where reversal happens is like when price pushes up to 75%, it starts to struggle, volume increases, you see, starts to struggle, volume increases there, all right, and then boom, reverses back toward 50% level. Okay, that's the rubber band snapping. So 25% level is very strong trend signal. Uh, that means lower midpoint 25%. So 25% level is a weak retracement zone, meaning if price only pulls back 25%, the trend is very strong. So if it is going uptrend, right? Um, let me find the example. Let me find a better example. Um, I mean, yeah, this we can take. So see, it made new high, then it pulled back to the 25% level, you know, then it went up, came back here. So this would be a good trade to take. Okay, that's what it's talking about. So in action, price barely pulls back to 25%, then continues the trend. Okay, and that's a strong trade signal. Okay, you can also take this one as well. Well, it tries to work on this here from there to there, but the uh, careful trade would be this one here. Yes, this was in uptrend. This acted as support here, and then from here it just take. Okay, so the complete retracement framework is this. Okay, 100% full range, 75% upper midpoint, and 50% midpoint, 25% lower midpoint, and 0% HTF low. And we talked about this. So uptrend example is like set up price at 50%. We are in uptrend, price is at HTF midpoint, and you can see this is live happening, guys, so that you can understand it better. Okay. In the last lecture, I was showing you this example, and you can infer this that this works. Okay. And see the entry signal of price bounces off 50% and it starts moving up. That's what we did here, right? If you haven't watched that video, I would ask you to please go ahead and watch the last video. uh, and then target is STFI. I put the target here, right? STFI. And if we can measure this, we can measure the trade here. So I can take long position. I enter there, right? Loss there, right? My take profit, I put it here. So it's 1:4 trade. Okay, you see 1:4 trade. So price moves up, reaches the STFI, that's our target hit. Okay, and it's gonna hit later on, which I'll show you uh, in the video. Okay, downtrending example, we can see uh, here. I think this one, yeah, 75%. So if we enter short there, okay, uh, we can take take profit like around here, right? So you see price hits 75% level, gets rejected, rubber band effect, the STF low target, and stop about the STF high or 75% level. okay, which we have done. All right. So yeah, I can let's just do it here. If I enter short here, put loss there, stop loss, and take profit around here. Okay. It didn't hit the target, but you can see it's like 1:4.58. So you can adjust. You can just like move your stop loss later on, like trailing stop. Okay. So you can see price drops, which is the HTF low, target hit. That's how you trade with structures. And you can see a couple of trades there, um, like this one. You see, it hit our target. So if you had taken this one, this trade, um, right, stop loss there. This would be your 1:6 trade. Yeah. Okay. And I'll show you like how this trade is valid. Let me just show you. We're gonna talk later on about this. So see, when I enable this, you will see this trend line coming down, and this descending trend line. This is what gives us that okay, this is high probability trade. You see, so yeah, when this and this line meets, that's where the trade happens. So I'm gonna show you later on how to use that as well. Okay, so see, this is going up, so this is a good trade. Um, this we can ignore for now, gaps, but you can understand that like gaps at midpoint, something really important is happening there. Okay, meaning when price gaps right at 50% level, this happens a lot because the midpoint is where the market wants to go. If I use it in like some stocks or something, we might see some gaps there, in higher time frame. But in crypto market, you don't see that gap. Okay, so if you see that, that's a continuation signal. So if you see a gap at 50% level, that's a continuation signal. The trend is strong. Okay. Now scaling out strategy would be if we are in uptrend and price pulls back to the lower HTF midpoint. Okay. We can the price bounces up 25% with strong volume. That's a high probability long entry. Okay, that I've shown you. And let me disable that trend line for now. Okay, so that it doesn't distract us. So yeah, what is telling us like if we enter long here, first target would be say 50% level, second target would be this level, and the third target would be just STF high, your this, this STF high. All right. So that's how the like scaling works here. Okay, you can see 50% midpoint, then 75%, then 100% final exit. Okay, we must take partial profit, guys. Okay, and that's how we scale out these using these levels. All right. So let's go through what we talked about in this lecture. A couple of key takeaways are SGFI. We can see it as ceiling or resistance in downtrends and target in uptrends. You know, and STF low is your floor. We can think of them as floor or support in uptrends or target in downtrends. And HTF is your equilibrium point center of gravity, which is the most important level. It acts as magnetic point. Okay, like you can say midpoint magnetism. The 50% rule is first pullback typically reaches 50% of the prior swing. Okay, you can see here. Yeah. So the retracement is 50%, and uh, that's the 50% rule. 75% our band is stretch price wants to snap back, which is a reversal zone. Okay, and these are mathematical facts, not opinions. All right, I've shown you a lot of examples, and you can, as you have access to this indicator, you can run through simulation and prove it to yourself that this really works. All right. So what's next? In the next lecture, we're gonna go deeper into multiple time frame analysis. Okay, and here we're gonna be learning the secret that separates professionals from amateurs, and that you need to know what's happening on multiple time frames simultaneously. This is where it gets really powerful. What do I mean by that? Is we will be doing some like like this, and here I might put. Um, here I may put 1 hour time frame, right? And here 15 minutes time frame, and we are doing analysis simultaneously. What's going on higher time frame and what's going on lower time frame. Okay. So yeah, guys. So I'll see you in the next video. All right. Remember 3 levels use infinite power, and I'll see you guys in the next video. Thank you.